Welcome once again to Lehto's Law. Here's Steve Lehto.
Caleb sent me a story from KIRO television, it's Channel 7, and or Cairo, as they call it. And it's an interesting story because I used to handle insurance claims years and years and years ago. And there was a way you could do that in Michigan and get your attorney fees paid by the insurance company if you won. So clients wouldn't have to put up money to chase after insurance claims that had been denied. The insurance company's got that law changed, so now it's not economically feasible for the most part to hire an attorney on a lot of cases. And so I don't do as much of that as I used to, but I remember things that happened during that time. And one of the crazier things I'd hear about is somebody found an insurance claim, and the insurance company go, "We're going to investigate your claim." And the first thing they do is they pull their credit report. And they'd pull the credit report as part of the claims investigation. And I remember asking these people from the insurance companies, "Why do you do that?" They'd say, "Oh, because a lot of people, when they get hard up financially, will fake an insurance claim to make some money. So we pull their credit score to see, in their credit report, to see if perhaps they have a financial incentive." And I personally think they're doing it just to harass people, but it was just standard operating procedure. They'd pull the credit report and take a look at it, and I sat through depositions where my client was being grilled about their credit report, and that was just a common practice. But what's even weirder, and most people I think know this, but haven't stopped to think about it that much, when you apply to buy insurance, they'll often pull your credit score then as well. And the question is, do they really need that information to, insure you? So in Washington, the state of Washington, the insurance industry helped write changes that gutted a bill that was designed to take credit scoring out of insurance coverage. So what happened was they were talking about this concept that you go to get insurance coverage and they pull your credit report and look at that to determine whether or not you are insurance worthy. So it was a Senate Bill 5010. It was supposed to end the use of credit scores to determine insurance rates. So now it's been amended to a bill that freezes your credit score for insurance purposes. For the next 3 years, your score can go up, but it can't go backwards, says Washington State Senator Mark Mullet. And we're buying some time hopefully to continue to look at this policy. So it looks like the bill's going into law, but not the way it was intended. Senator Mark Mullet is the chairman of the Senate Business, Financial Services, and Trade Committee, and that's the committee that the bill was just voted out of. Anyone who has a credit impact from COVID, this bill ensures that credit impact will not increase the cost of their insurance, says Mullet. So Jesse Jones from KIRO went to the Washington's insurance commissioner, Mike Creedor, who proposed the bill, and I asked him if he thought the insurance industry flipped the bill. And he says it has. They took a bill that was there to help consumers, certainly address the issues of equity in our society, and essentially gutted it to the point where it protects their interests of the insurance industry at the expense of consumers. So KIRO says that a government relations employee of an insurance company helped draft the amendments. And the senator says that is, in fact, what happened. He says there's stuff in there, but like I said, the 3-year moratorium piece, you don't need much help drafting that. It's a pretty straightforward thing. The commissioner says the amended bill is watered down and still allows the use of credit scoring. It also only applies to renewal policies. This is really old-time politics where you effectively turn it over to the industry to effectively control what the legislature does. And that is something that happens in a lot of lawmaking. You'll hear about how some bill up on Capitol Hill is going through the process of the different committees and so on, and somewhere along the line, some lobbyists actually get involved in drafting the legislation. And they draft it in such a way that it helps their industry. And that'll happen to laws that are designed to actually regulate that industry. So when you have the actual foxes writing the statutes for the protection of the henhouse, you know that there's something wrong. The senator sent an email to the TV station after the press release was put out, urging voters to ask their senators to reject the changes. TV station says we've been investigating the use of credit scoring to determine insurance rates. Numbers provided by the Consumer Federation of America show that, of course, zip codes also play into it. And often it's the zip codes with the lower incomes that get hit the hardest. The AARP has also come out against this practice. The AARP Washington Advocacy Director Kathy McCall says, in the case of many seniors, they no longer have credit. They don't have revolving credit on credit cards, or they pay them off, or they rely solely on a debit card, which does not impact your credit rating, or they paid off their mortgage and are no longer holding a mortgage. And a credit score reflects your payment history. So somebody who doesn't have a whole lot of credit activity might have a lower score. Doesn't mean they're not insurable. Creedler says he's provided information, including a Consumer Federation of America study that shows people with clean driving records but poor credit scores pay nearly 80% more than a good driver with a high credit score. Creedler says the bill is in its old form needs to be voted on, but if not, then I'd say let the bill die. It doesn't do anything for consumers. So the guy starts out by saying, hey, look, it's unfair that they look at your credit score and use that to determine how much to charge you for insurance. And now here's the thing. The insurance industry hates me. They hate me more than the auto industry does. And I've done a couple videos about insurance, and every time I do, I get a lot of hate from the insurance industry. And I pointed out a few years ago that if you file a claim in Michigan back in the day, and you had lots of money, they'd pay your claim. If you didn't have lots of money, they'd deny your claim. And there's no question that there was a correlation, because people with lots of money can afford attorneys, and people who don't have lots of money can't afford attorneys. And that was one of the major factors that clearly played into that. And I pointed it out in a couple of videos, and that's where I get all the love from the insurance companies. But when you look at whether you're going to insure somebody, right, there's certain things you're going to look at. And it's obvious for, say, auto insurance that you're going to look at their driving record and their claims history. Is this person getting tickets left and right? Is this person filing claims left and right? Are they getting in accidents left and right? Have they had 6 cars stolen, 5 cars vandalized? And you look at the history of somebody and go, okay, this person's obviously a risk of some sort. That's not rocket science. And so you also look at what they're insuring. Are they insuring a $100,000 car? Or are they insuring a $5,000 beater? What are they? So you look at that also. But the idea that you look at their credit history, their credit score, to me does seem a bit of a stretch. And I've heard them make the argument that there is a correlation of some sort between people who file insurance claims and people who've got bad credit. I'm not sure if I've ever seen evidence of that, and if they've got evidence to back it up, then I think they can make the argument. But as these other trade groups point out, like the AARP, there are simply people in America who don't have a good credit score because of the fact that they're older and they're in a position in life where they are not using credit as much as they were when they're younger. And, you might say, but Steve, if they're AARP, maybe they might have other risks, but you can quantify those other things, their driving record and so on. So the bigger problem you have, though, is when somebody says, I'm going to propose a bill, right? Somebody's got to propose a bill in the legislature, and they do whatever they do to say, let's get this bill started. And what happens, generally speaking, is they'll read the bill, it'll get entered into some thing, and then it'll get sent to a committee, whatever committee it is that oversees whatever this most affects. So it gets sent off to the committee that looks at insurance. And of course, on that committee are a bunch of people who deal with the insurance industry. And they're the ones, by the way, who have the closest relationships with the lobbyists from the insurance industry. And you can bet that the insurance industry's got lobbyists. Okay, they've got lots of lobbyists. They got lobbies full of lobbyists. And so those lobbyists are, keenly watching everything that goes in front of this committee that might affect them. Boom, here comes a bill that says that we're going to possibly change the rules on how you write insurance in the state. And a lobbyist goes, hey, let me see that bill, and we can make some tweaks to it to make it better. And they rewrite the bill. And technically speaking, to have your credit score frozen right now would help people whose credit score is about to drop. But COVID, of course, has been going on now for over a year. So there's probably a lot of people whose credit score has already dropped. And the real question is, does it make sense that the legislature asks the insurance industry to rewrite the bill to make them happy, put it back in the committee votes on it? And so, there's a lot of problems in our society, and I'm not here to solve them. I can only, I'm one guy with one vote and a camera. And by the way, the greatest audience on YouTube. But one of the things that you can do is we can look at the problems, spot the problems, call out the problems. Identifying the problem is always step number one. So there is a problem here, and the problem is the influence that lobbyists have in our legislatures, whether they're in the state level or the national level. And the idea that somebody has a proposed bill that's going to protect me, it's going to protect you, it's going to protect everybody else, and they hand it to the insurance industry and go, here, you guys write this in a way that you like. That's who they're trying to protect us from. And letting them write the bill is odd. So I've always had a problem with the influence that legislators are under from lobbyists. And I'm not sure if influence is the right word, because it's a symbiotic relationship. That is that a lot of the politicians, a lot of the legislators, they like the influence because the influence comes in the form of money. They get paid. Now, it's not bribery in that sense. It's often money towards their reelection campaign or something, although once in a while it does take an untoward turn. But the point is, why does a lobbyist from an industry have any more sway than you or I? They shouldn't. They shouldn't. Now, I know there's been all kinds of court cases on lobbying and lobbyists and the First Amendment and so on and so forth. And so I doubt we're going to solve this problem anytime soon. The best we can do is shine light on it. So I think it's interesting. And if you live in Washington State, you should be paying very close attention to this. Because this is the kind of bill which, if it catches on there and does well, in other words, if they straighten this bill out and it does well, then perhaps it'll spread to other states. But as of right now, there is a bill in the state of Washington that was designed to remove credit scoring from insurance consideration. And the insurance industry put it back in and said, well, we'll freeze the score for a little while and then we'll consider it. As if that solves a problem, which it doesn't. So Caleb sent it to me, thanks a lot. Jesse Jones wrote it for KIRO or Cairo 7, the TV station. Questions or comments, put them below. Let's talk to you later. Bye-bye.
Thank you for watching Lehto's Law. There are lots of people who mistake their imagination for their memory.